A complex correction is any correction other than a simple three-section ABC. And a key factor to identify if a market is making a complex correction and not a new trend is if the sections overlap. So let's take a look at some data, follow it along bar by bar to see if we can identify if the market's making a correction or not and whether it's going to be a simple ABC correction or something more complex. So this data happens to be 240-minute data of silver. And the different colors of the data are because of different days. In other words, once it changes color, then that's the next day's worth of intraday data. So that's why the color changes. So as always, everything we teach is applicable to all markets and all time frames of any actively traded market at least. So let's add bar by bar and see where we're at. As of the last bar in this chart, we've got a section up, correction down, second section, and another section that's made a new high. So are we making a correction here, or are we in the beginning stages of a new bull trend? Well, since I'm not showing data prior to this decline, it's hard to distinguish one from the other at this point. So what we want to do is just add bar by bar and make decisions on the probable position of the market as we add those bars. So let's do that. There's a bar we traded above this swing high that immediately flipped back down into the range of this initial advance for an overlap. One bar doesn't make much difference, but if we get several bars, well, that makes a difference. So so far we've had this overlap. We did a break to new high, and think logically. If a market's in a bull trend and it breaks to a new high and takes out a prior swing, usually that brings a lot of buying into the market. And in this case, it didn't. It broke a new high and then immediately turned back around. So there wasn't a lot of buying power in this market. Came back well into what we would call an overlap. So more than likely, this market is making a correction. And as of the last bar in this chart, we're at least in a position to have completed an A, B, C three-section correction. We don't know if that's going to be the case or not, but number one, probable correction. Number two, we're at least in a position to have completed an ABC, or in a position for this to be a wave C, let's say. We'd only be in a position that it would be complete if we take out this low. Why don't I put some labels on here as we're moving along? So potential A, B, C. We'd have a question mark on this yet because until we take out what I got labeled a wave below, it might not be finished. Let's add some more bars on the chart. There we go. As of the last bar in the chart, we've gone ahead and declined below this wave below. That means we definitely have three sections complete. So it gives us one solid piece of information that this market happens to be silver, is making a correction from this low. And it's in a position to have completed an ABC correction. What happens if by chance the silver turns around and trades sideways, even makes a new high? Does that mean we're in the beginning stages of a bull trend? No, it's already told us that it's making a correction, and if it continues sideways to making a new high, it would simply be something other than an ABC correction. So let's add some more data on here. So as of this point in time, some people may get very excited. They say, wait a minute, the market just took out this swing high. The bull trend is back. Well, the pattern at least is strongly indicating that that's not the case, that this is just something other than an ABC correction, because we've already had three complete sections up, then we've taken out this swing low. So some kind of complex correction is probably going on. And let me add some more data. Let me close this and get this squared away a little bit. And there we go. We're just going down and down. Of course, we would have taken that off. You can take that off. It's not giving us any other information. So then here we are. We've taken out this swing low. How do we label this correction? Let's get into that later on. But the point is, this should all be part of a correction, and at least eventually, in this case, the bear trend should continue to a new low. It's already taken out the swing low where the correction began, so it's probably complete. And it looks like that indeed is the case. And the reason I wanted to add a lot more bars on is we had another complex correction in here. Again, it wasn't a simple ABC. It was some other labeling scheme, but when it was complete, the bear trend continued. When this correction was complete, the bear trend continued to a new extreme. And that's the lesson. We want to be able to identify as soon as possible if a market is in a correction or not, if it's making a counter trend or not. And we also want to be aware that it's not always going to be a simple ABC. It could be something more complex, but we want to identify as of a certain point of time whether it's part of a correction or not. So again, we identified that this we had the first signal was probably a correction when we came down and traded as an overlap, and then it was confirmed when we took out this swing low that whatever the market did after this, if it made a new high above this high, it was part of a correction, and eventually the bear trend would continue to a new extreme. Same in this area over here. Eventually, when it was finished, complete the correction, the market would continue the bear trend to a new extreme, exactly what it did. Let's take another look at a market bar by bar. As of the data that we have on this chart, I'm not making any judgments about what the top or this high was and whether we're beginning a bear trend or maybe beginning a bear trend or a correction. Let's just look at it bar by bar and make some decisions based on the pattern of the market. So as of the last bar in the chart, we've got two distinct sections that are complete. And here's how I frequently label sections like this. Is this an A and a B, or is it a 1 and a 2 of a bear trend? Well, I don't know. So a lot of times I will just label it's a 1 or A, and it's a 2 or B, and we're making a 3 or a C. We'll let the market tell us what it's doing, what it's making, and instead of making a judgment. So let's add some more bars on the chart. We're in a third distinct section. And what would indicate that this is not a wave 3, that it's probably a C, part of a correction? Once again, the overlap rule. And since this is daily data, we can actually make a line here at the close. So if we make a daily close into the closing range of what I've got labeled as a wave 1 or A, it would indicate that this is probably part of a correction and not an impulse trend. So let's add some more data on the chart. There we had a strong move up, closing well into the range of what's labeled a wave 1 or A. So are we making an ABC correction? Are we making part of an impulsive bear trend? More than likely, it's part of a correction. It's not confirmed yet. It would be confirmed if we traded above this high. But we can look at this as a probable A, probable B, probable C. We would have a question mark on it. But more than likely, it's a correction and not an impulse trend. Let's add some more data onto this chart. And by the way, we can add, let's draw a horizontal line across what I got labeled the wave B high, because if we trade above it, it would confirm 3-section decline. So it's either an ABC or it's part of a more complex correction. Continue to add some data. Let's get everything back on the chart here. So as of the last bar of the chart, we traded well above this wave B high. So we've completed these three sections down. This is an ABC. Is it a complete correction or not? We don't know yet. Is this the start of a bull trend, impulsive bull trend? We don't know yet. So let's continue to add some data onto the chart. Boy, we're all over the place here, aren't we? We've come down and taken out this swing low. So what do we have so far? We have a completed ABC. We've got another completed ABC going up this way. We're definitely in some sort of correction. We're not going to get into paralysis of analysis here. The one thing that we should be aware of is that off of this high, this market is making a correction. Is it a complete correction as of this low? Probably not, because we just had another completed ABC up. That would indicate that this is a correction to the correction, and we're probably going to make a new low, but it's probably going to be part of a complex correction. So let's add some data onto the chart. And there we are. We made a new extreme. Are we in an impulsive bear trend? We're probably not. We're probably in a complex correction. Well, I paused the recording while I added quite a bit more data onto this chart just to show you, well, actually where we're at now. This is around the time of when I'm recording this. And let me add just some other labels on here. So as we continued to decline, we had an ABC. Potential could have been completed correction of an ABC, but then we had another ABC up and then a decline taking out that low, indicating this was a completed ABC. That's a correction to the correction. And then we had another ABC decline, and then the trend reverse to bullish took out this swing high, indicating that this three sections was complete. How does this all fit in together? Well, that's the subject for labeling and subdivisions of more complex corrections. The whole point was, as of back this point in time, we realized that we were probably making a correction. We're in a position for an ABC. Once we took out this high, it confirmed that this was an ABC. We did then turn around, have a strong decline to a new low, but knowing that this was an ABC, that indicated that this was some sort of complex correction. It was going to be something other than a simple ABC. And when it was complete, we would probably continue to advance to a new high. Now, like I said, this is actually data just up to a day or two ago from when I'm recording this. Are we going to make a new high? Have we completed this correction? Well, again, we have other things to learn about time and about price position and also labeling more complex corrections, what we'll get to. But we're in a potential position to have completed this ABC, ABC, and then another ABC down into this low. Whether we have or not, well, again, we have other techniques we use to help us identify if that's the end of it. But in either case, what does this look like, by the way? What did we look at in earlier modules? Does that look like a corrective pattern or an impulsive pattern? Well, you might keep that in mind as a hint to whether we've completed a complex correction or not. Looks impulsive to me, doesn't it to you? Okay, let's go on to some other patterns. This is gold daily data. As of the last bar in the chart, it looks like we've made an ABC correction. We've come down and traded below the potential wave B low. So more than likely this is a correction. It's an ABC. Is it a complete correction? Well, maybe, maybe not. The point would be is however the market continues to unfold, more than likely it's going to be part of a correction against this decline, and when the correction is complete, then the bear trend should continue to a new extreme. So let's add some bars on the chart and see how this develops. So again, we've had a swing up, a section down, then we've come back well in to the range of this original advance. Lots of overlaps here, lots of choppy markets. We don't even have to put labels on this. We're making some sort of complex correction. And so far, we've gone quite a ways and remained within the range of that original ABC. Let's go ahead and add some more data. So we've got an obvious section up, one down, it's a higher low, another section up, a lower high, another section down, a higher low, and then now we're advancing again. Let's see where this takes us. By the way, let me take this line off. So before we add more data, when we have these swing highs and lows and they're narrowing in range, they're not taking out the prior highs and lows, that's some sort of contracting correction. The most typical is an A, B, C, D, and an E. So do we know that this is what it is? Do we know that's what it's going to end up being? We don't know that. What would indicate it's complete? Well, two things. Let me just put some lines on here. And again, it's pretty logical and pretty simple. If this market completes a swing high and then declines to below this low, then more than likely we've completed an A, B, C, D, E contracting triangle. Let's go ahead and add some more data. We can say at this point we're in a position to have completed an A, B, C, D, E contracting triangle, which is a fairly common correction, probably the second most typical correction after ABCs. So you should be aware of these, and we're going to learn a lot more about these when we look at subdivisions and how to identify, give us further information that that's exactly what's going on. But so far, we've kept it very simple, that we've had these contracting swings that make higher lows, lower highs. It's like a spring being wound up, that once it breaks away from this pattern, it's probably a completed correction, and I would not be surprised to see a fairly sharp move because there's a lot of built-up power here and here. Think of it like a spring, contracting, contracting. When it breaks out, it unleashes. Well, once we've taken out what I've got labeled the wave D low, more than likely this 5-section A, B, C, D, E contracting triangle is complete, and the bear trend will continue without taking out this high because that's the end of the correction. So those are A, B, C, D, E corrections. Again, the second most frequent correction after ABCs, and they can also take the form of expanding ABCDEs, where we actually continue to make new highs and new lows, but they're very infrequent and expanding type of ABCDE. Can be a flat, 5 sections. How do we determine if it's probably an ABCDE? That type of correction, again, it'll be dependent on how these sections are breaking down the subdivisions within them. And again, you'll learn about that in a later module. This is gold daily data, and this data is right up through the day that I'm recording this section. And the reason I want to take a look at this data is let's look at it and see what the market can do to indicate whether it's making a correction or an impulse trend. So let's just look at this data that's shown on the chart. We don't need to look at the data coming into it. We don't need to make a judgment if this trend is bullish or if it's a correction against a bear trend, that sort of thing. Let's see what we got and then identify what the market can do to confirm or invalidate the probable position of the market. Listen to my language. It's almost always I'm talking about the probable position and confirm or invalidate that probable position. We never know what it is, and it's why when I put labels on the Elliott wave numbers or letters, a lot of times I have a question mark next to it. In other words, whatever the label I have on it is the probable position, but it hasn't been confirmed yet. So let's take a look at this data. Up from this low. What's going on here? Is it impulsive or is it corrective? Is it 3 sections? Is it 5 sections? What is it? Well, it looks pretty clearly like it's a section up, just as one-day decline, and then another section up. That looks like A, B, C, because then we've come down and taken out that low. What would be another way to look at this data, given that this is one bar that didn't have much of a change on the close, but intraday it came down pretty sharply. So do we want to consider that a section down? Well, another way we can do, and we can look at the data, is on the close-only data. This is daily data. So let's take a look at the close-only data. If we're looking at just the closes, the daily closes, there was no ABC. It's just a straight-on advance. And we don't need to subdivide it or anything like that at this point. It's just we got a section up and we got a section down. And certainly the section down pretty clearly looks like an A, B, C. It looks like three sections on the downside. So that looks like a correction coming down. This, if we're just looking at the daily or the closing data, yeah, we could look at it as a 1, 2, 3, 4, 5. Let me go back to get the full day's range on this data. Another way to look at this data is to look at it intraday data. Let's do that. So this is the intraday data beginning where that daily low was. This is that basically 1 day's bar on this in this 240-minute data. Looks pretty clearly here like a section up, section down, section up, like a potential A, B, C. So which should we focus on? Let's just say, let's not focus on either of them. Let's not make a judgment at this point in time if that's an A, B, C, or if it's a 5-wave advance, which it looks like on the closing data, looks like a correction on the intraday data. Let's just say section up, and remember how we sometimes look at either or. It should be a 1 or an A. It could be either one of those two. It could be the beginning of a bullish trend. It could be the beginning of a correction, one or the two. And let's just say we don't have a firm opinion on that because we're not looking at the trend coming into this low on whether we would be anticipating a correction or reversal to a bull trend. So of this decline, though, that was a little more clear, wasn't it? That looked a little more like an ABC. It was 3 distinct sections on the intraday data, certainly. And if that's the case, that should be a wave 2 or B low. Now, what's happening here? So we've got a distinct section up, a correction, another distinct section up. And is this a correction or not? Is this a correction or is this the end of an ABC and then we're going to continue to a new low? What can we do? What can the market do to say that this advance is complete, it's not impulsive, and it should be some sort of a ABC type of correction? Well, if it had a closing overlap, it's pretty simple stuff. So I'm going to draw the horizontal line on the high close there. I think that's the high close, yep. And if gold comes down and closes below, in this case 1758.20, this swing high close, that would be a closing overlap, and it would indicate that this advance is a correction and not part of an impulse trend. What if the gold continues higher, makes a new high? Well, remember in our impulse trend section, That would probably then be a 1 and a 2, a 3. Let's just say it did that. Then it made a new high. Let's erase this. If that were the case, we completed 5 waves up. What could it do to indicate this was part of a correction? In other words, this was an A, that was a B, and this was a C. Well, it could trade or close below the closing high of what I got labeled the wave 1 or A. So let's do that. So we're going under the assumption that gold continued higher without, let me put this other close back on. There we go. It continued to a new high without making a close below 1758.20. So then we have another piece of information. Is this a 1 or an A, a 2 or B? Is this making a 3 or a C? Which one is it? Well, if we closed below the wave 1 or A closing high, that would indicate that this is a corrective advance, and it would be in a position to have completed that corrective advance. So I don't know what's going to happen. What I do know is that I can identify various market activity to confirm or invalidate a particular pattern and a particular trend or counter trend. So that's how we look at the market as it unfolds bar by bar. This was actually yesterday's data as of through yesterday, the day before I'm recording this. I don't know how it's going to turn out, but I know there's a couple things that I'm watching for. I'm watching to see if we make a close below this level. That's what I got labeled a wave 1 closing high. I don't know if that's what it is. And I'm watching if it happens to make a new high in the next few days. This will be the next level that will indicate whether the market is bullish or making just a correction within a higher time frame bear trend. Let's take a look at one more situation with data right up through, in this case through yesterday. This is crude. It's daily data. And it's beginning from the March 8th high right up through yesterday. I don't have today's data on this data file, but let's take a look at this data. Let's say we've been on vacation. We just got back, and we're interested in crude oil. And let's take a look and see, is it in a beginnings of a bull trend that's going to continue to a new high? Is it making a correction off this March 23rd low? What's going on here? We never know what's happening, but we can use the pattern position to give us a very good educated guess. And then at some point in time, when a pattern is confirmed or invalidated, we can then structure particular trade strategies, very specific trade strategies. Well, first let's look from this March high, and that was a very significant high, all-time high. Not all-time high, but a high for the last year or so on March 8th. Then we came down, and the swing low was made on the 23rd. What's this pattern? Well, that's pretty plain, isn't it? It's a straight-on impulse pattern, 5-wave impulse pattern that you learned about a couple modules ago. If this would, I'm going to add some data on here, just bring some of the past data on. So we've been in this bull trend for many months into this March high. This is the first time we had a reversal and a clearly defined 5-wave trend on the downside. So you'll learn about subdivisions later, but a correction should not be complete in a 5-wave trend. It shouldn't break down into 5 waves. That's one of the keys of 5-wave impulses is they indicate the higher time frame trend. And since this is the first 5-wave decline off of the March high, more than likely that itself is telling us it's a 1 or an A. Maybe an A of an ABC correction or a more complex correction, maybe a wave 1 and we're making a wave 2 correction. Either way, this should be a wave 1 or an A, and this should be making a correction. Boy, it's been going on a long time, and it looks like it's 5 sections itself. Let's break it down. So the first thing we want to look at, have we made a closing overlap? Let's go to close only data. So this was that first section up. That's the closing high of this section. Then we came down and we closed for 2 consecutive days below this closing high. That's a closing overlap. What does that warn us of? Warns us that more than likely we're making a correction. It might have gone on much longer and even be further in price than a typical correction against this, what was this, maybe a 2-week impulse bear trend. But the fact is, pattern-wise, we're just focusing on pattern. This is indicating this is a correction of some sort. And because so far it's 5 distinct sections, what would it look like we're making? Probably an A, B, C, D, maybe an E. That's the second most common type of correction, isn't it? An A, B, C, D, E, 5-section correction where there's an overlap, and we've got the overlap. What would indicate this correction is complete? Well, the obvious is a trade below the last swing low, what I got labeled as a wave D. Now, once we learn more about subdivisions, and we could identify, even from pattern, a much closer in pattern reversal signal. But once we take out the last swing low and this 5-wave ABCDE correction, it would indicate that the correction is complete, and the trend prior to the correction, which was a bear trend, should continue to a new extreme to below the March low. So even that's a really valuable piece of information. So we've got several valuable pieces of information here. Is more than likely this is an impulse trend, and we're making a correction to that because we've already made a closing overlap. More than likely, we're very near the end of this correction because we've already got 5 sections, an A, B, C, D, E. And a trade below this last swing low would indicate the correction's over, and the bear trend will continue to below the March low. A lot of good information here based on some really simple guidelines on how impulse trends and how corrections are typically made. There's an important lesson that I want to show you before we consider what is the pattern of this market. Well, it has to do with what the pattern is or isn't. And that's related to this one very volatile day. So this is daily data of the IYR, and that's a real estate sector ETF. It's a good one to trade. A lot of people trade it. Has lots of volume, good trends. So let's take a look at this day. What happened on this day? We can assume there was some news event that kind of shocked the market, at least short term. Any day that has this kind of a range is usually as a result of some news event. Let's look at what this day is composed of. Right where my cursor is the open for the day. Then it just shot up. Really wide range advance. But then by the end of the day, it came down and closed near the low of the day. So should we view this as a swing high in any sort of wave count? Generally, from my point of view, is no, because it didn't change the trend of the market at all. Certainly didn't make any kind of reversal. And particularly if we look at closes, let me just do the daily closes. Again, it's daily data. We're not even aware of that day. The close was just right in alignment with what the trend, the bullish trend, had been for several days or a week or two. So if doing pattern analysis, a day like this, I would just ignore and ignore it as a swing high or a swing low if it happened to be. And the reason for that primarily is, one, it just doesn't make sense to consider this as a swing high and then a correction and then continuing on. It doesn't make any sense because the close was right in alignment with the trend, afterwards the trend just continued. So be careful about volatile news days if they happen to make swing highs or lows, and considering them as part of some sort of pattern analysis. When the close is just in alignment with the trend, then just ignore the high or low. Okay, so let's look at the data as of the last bar in this chart. We had an advance, and then it looks like we've got a potential ABC correction. So we want to look at what would confirm it as a probable correction, what would signal that that correction is complete, if it is a correction, and if it doesn't unfold as a impulsive bear trend. So the first thing is we want to consider the overlap rules. Where would be the corrective low here? I'm just going to do it right at this low. Potential A, B, and then we're continuing lower. If we come back up and close into that range, more than likely it's a correction and not a bear trend. So let's add some data on to here. Well, the next day it closed up. What do we have here? Is this the beginning of a bear trend, or is it an ABC correction? I made the choice for this example because, well, it's only a few days in each direction. It looks like 3 days down, 3 up, 3 down. So it doesn't have any wide range, real defined swing highs and lows based on the close at least. But it's enough information to give us at least a warning that this is probably a correction. It's in the position to complete an ABC. Let's just label it as such. What would confirm it as an ABC? So we've got the overlap. That's the warning that it is. Well, a trade above the wave B high would definitely confirm it as a 3-section ABC. Well, let's add some data onto this chart and see what kind of information it gives us as we get each new bar. Well, as of the last bar in this chart, we traded above what I've got labeled as a wave B high. Looks like we traded above it by just a tick and then it ended up closing lower. So can we consider an ABC correction complete? We would look at this and say it's probably complete. At the very least, all of this should be part of a correction since we've now traded above the high. We'll talk about trade strategies more in a later chapter, but the point is we've had some good indication that this market is making a correction with a potential ABC, but if it continues sideways to even lower, all of that should be part of a correction. Now, that's an important piece of information. We're not going to be precise every time of what's the exact pattern, but the first question we want to always answer, is the market in an impulse or is it in a correction? So again, I'm using this example because it was pretty sloppy. So let's add some more data on and see what happens. Well, there we got a few more bars. We've made a new low. So we have decline, advance, decline, advance that took out the swing high by a tick and certainly made a much higher close on the prior bar. Let me do the closes again. I'm always switching back and forth on daily data to see what the pattern of the closes is. So again, new closing high. Again, it's telling us more than likely this is all a correction. It could be an A, B, C, D, and E. I don't know that for sure, but again, when we get into trade strategies, and if we get in the 5th section of a correction, what we consider a wave, potential wave E, there's some good trade strategies with low capital exposure we can consider. I'm going to add more data. There we made it actually lower low, big snapback reversal day. Have we completed a wave E? Well, I don't know. The lesson here is this is some sort of correction. Let's just add some more data on. There we actually made a new intraday low, not a new closing low, but new intraday low. Again, just look at this as of the last bar in the chart. Bearish impulse or some sort of correction. I'm either going to take these off so we don't get prejudiced as to what kind of correction it might be, but I look at this and say, I want to take every opportunity this market gives to get long, because it is proven over and over again throughout the last 2 to 3 weeks that this is making a correction, and when it's complete, a bull trend should continue to a new high. Let me just add some more data. Look at that day. And there we go. We made a new low, and we took out this high by a few ticks. So again, it's some sort of correction going on here. And then if we add more data, there we go. We finally finished that correction, and we've continued to a new extreme, just as anticipated once we identified this as a correction. Now, this wasn't a lesson for us to put specific wave counts on this and labels on this. We'll do that more with complex corrections when we get into the subdivision section, or the subdivision module, because then we can start identifying how each of these sections may be breaking down, and that'll help us to identify different probable points in time and price and pattern that would complete the correction. So we'll get into that later. But this was valuable information to have early on, that this was probably a correction, and then we want to orient our trade strategies to the long side. This is Tesla stock. It's daily data. And boy, Tesla in the last year or so, at least as of the time I'm recording this, it's just had a heck of a bull run, as you're all aware, during around 2020 and early 2021. But let's take a look at where we're at now in Tesla and what's going on with it. So I've got data from the January top. It's into the March low a few weeks later. And let's add some data on and see if the market is bullish, if it's bearish, and where it is within a bull or bear cycle or trend, and identify just a general potential trade strategy we'd want to be aware of. So we've had this significant decline. We've had an advance, pretty much straight up here. Here again is this volatile day. I think I had that in an earlier example as well. It's probably that same day. We look on the closes, just kind of one section up. So if we believed that Tesla was in a bear trend, should not the pattern, but should the correction be complete as of the last bar in the chart? Well, it should not. This should just be the first section up. If it's making a correction, and it's may not even be complete yet, we'll add some data in a minute, but it's either has completed or in the process of making a wave A. And if we did believe for some reason that Tesla was still bullish, it would just be a wave 1 of a continuing bull trend. But let's add some data and see what the market itself tells us without making any kind of forecasts or any decisions about it. So add some more data. So now we have a distinct decline. So this could be a 1 or A and a 2 or B. And let's look at it that way. Again, I think I've showed you some examples in the past. I don't know if this one's done, but we'll just put that there, that this is a probable 1 or A, probable 2 or B. What does that mean? Well, it means at some point we'll make a swing low here, and then we'll come up to test or exceed what I got labeled a wave 1 or A. Because if it's a correction, it should be at least 3 distinct sections. And if it's the beginning of a bull trend, of course, it'd be we'd have the wave 1 or A, the 2 or B, and then we'd continue to a new extreme. So let's continue to add some data. Okay, let's take a look at where we're at so far. So far, we had a section up, a distinct section down. This looks like it broke into a nice ABC, doesn't it? Which is a 3-section correction, real simple ABC. Well, we'll go ahead and put that in here. And that's typical of either a wave 2 or a wave B. So 1 section up, 1 down. We've now continued to a new high. What can this market do to indicate it's not a wave 3, it's not in a bullish trend, and it's making a correction and not a bull trend? Well, again, we just begin with a simple overlap. Let me put the closes on. Since we got daily data, we can do daily overlaps. So if we come down and close into the closing range of the 1 or A, that would warn us that this is probably a correction and not an impulsive trend. We could also do a close below this swing high. And again, that would be another type of overlap. Again, it would indicate that this is a corrective rally and not the beginning, or the resumption, I should say, of a bull trend. So let's go ahead and add some more data onto this chart, see what happens. Well, we've traded into the ranges of these two swings, but remember, it's the close that counts. So let's add some more data. There we go. We've closed below this swing high close. That's not typical of a bull trend. That's very typical of a correction. So this is actually the last bar as of the time I'm recording this. So what have we found out so far? What's probably going to be the outcome for Tesla? Probably, let's just do a little relabeling here. Keep it really simple. Probably Tesla has made or is making a correction. Is it over? And I won't put that on yet because we don't want to prejudice ourselves at this point in time. Let me do close onlys. Is it over? We don't know that yet. What we can say, and here's my the language that I use, is that as of the last bar of the chart, as of the last day on this chart, more than likely, coming up from the March low, early March low, Tesla is making a correction within a bear trend, and when the correction is complete, the bear trend will continue to a new extreme. That would, in this case, mean a new low. So it's making a correction because we've had three distinct sections up, and then we've come down and closed into the closing range of the first section. So that itself indicates that this is making a correction and not an impulsive bull trend that's going to continue to a new high. So that's really important information to have right now. Is it complete, the correction complete? We don't know if it's complete, but we know that even if Tesla should continue sideways and even make a new high, that more than likely this is all part of a correction, and if it did make a new high, it's just part of a complex correction. I'm going to add some data back onto here from this high back in January and the decline. What does this look like, by the way? Correction or an impulse trend? And remember back in the module on impulse, 5-wave impulse trends, well, this looks very much like a textbook 5-wave impulse trend. And what'd you learn back in that section? A 5-wave impulse trend indicates the direction of the higher time frame trend. And so number one, it should not be a completed correction. Number two, it itself indicated that the higher time frame trend is bearish and that this should be a correction. So this information helped us to begin with. This information gave us the strong signal this is a correction. Eventually, Tesla is likely to continue lower to below this March low. And boy, that's a long way down from where it is right now. So that's a really valuable piece of information for a trader to have.